Okay, guys, there appears to be a new ETF that gives investors the opportunity to act like private equity giants and shift away from public stock pickups. So they have this new fund by VanEck that give investors the opportunity to invest in, well, in a way, private companies. So here's the thing: you don't actually invest in. I had to actually record the whole particular video over again. But initially, I was under the impression that this fund, and I'll go over. By the way, quick. This is would be the name of the fund: VanEck Alternative Asset Manager ETF. So I thought this fund invested in private companies, and then you can invest in the ETF. But it looks like this firm invests in public traded companies that the primary part of their business is investing in private companies. So you're indirectly investing or getting exposure to investing in private equity or private companies. So once again, so this ETF invests in companies that a good part of their business model would be and to invest in the private market or private companies, and then they would initially end up selling the private companies or things of that nature. So I just wanted to make that clear. I had to actually record the whole video over again. So it gives the investors a way to invest in private companies. So initially, the CEO, and I would play the video. But a lot of times when I recorded last time, you couldn't really hear the sound. So that's why I'm not going to, have the video playing. But it says VanEck has launched an ETF providing exposure to private investments through shares of publicly traded alternative asset managers. But there are unique risks. Now, like I said before, so this fund consists of publicly traded asset management funds that invest in private investments, private companies. That's how it was. So you mentioned that right now, I guess the money invested, he expecting it to go from investors' money 2% to 10% over the next few years or over the next year as they go. And there were two other interesting funds that were mentioned along with this. By the way, the name of the fund is the VanEck Alternative Asset Manager ETF, ticker GPZ. We can click that. When I click on the fund from the site, it didn't show up, but that's okay because that's why I already had this. When the fund came out, it looks like June 5th, so it's just relatively new. And I'll also go over the holdings that's inside of it. But they also had one too that came out slightly above. I mean, slightly earlier. Well, like it's been out for a few years now. It says some ETFs has begun to invest small portion of their assets in privately held company shares, including SpaceX, such as ER shares, public/private crossover. Now, this fund has been out for a while. This is the what you know was out before ER shares, private dash public crossover ETF. They mentioned that. Now this one, year to date, we can see how it is. 1 year up 16%, 5 years, down 14%, and overall, you can see this fund's actually been out for a while. But the new fund that just came out that allows you to invest in asset managers who are public that invest in private companies. Also, in the article, they mentioned they have an ETF. This ETF has been out for some time as well, where it offers investors access to private credit through their ticker BIZD. It's BDC Income ETF, which invests in the business of developing companies that lend to small, mid, private companies. And they mention some popular companies' name. But let's go back to some companies, the top 10 holdings for this. And by the way, the yield of this, the expense ratio is 0.40%. If we look at the holdings, uh, Blackstone is a popular one. Brookfield, Apollo Global Management, Hamilton Lane, Blue Owl Capital. So you just kind of can see some of the companies that this consists of because they invest. This fund could be, a little bit more, volatile than the others as well. And this one was the that credit fund. This fund has been out for a while, but it allow you to pro- invest in companies. So companies that publicly traded companies that end up providing, you know, uh, loans for companies to end up growing. Now this fund has been out, sometime year to date, 1 year, 5 years, and max. So, but keep in mind, these particular funds, people would just like a stable stock price, and you would really collect the money from. This is just the increase and decrease in stock price, but you would want to take a look at the dividend that it's yield. So right now they have the 30-day SEC yield is a standard calculation, 8.98. But the dividend yield, distribution yield, the annual yield, the ones in 30 days and the 12 months, it can kind of all fluctuate, based off of the date that they were looking at and the time frame that they were looking at. But I thought I would just, want to share these particular funds and different opportunities of what you can um, invest in. But that's pretty much, and the reason why that they say there could be a demand is because a lot of private companies are taking a much longer time to go public. So, in order for you to get exposure to them, you would have to invest in a fund of managers that invest in those private companies so you can reap some of those returns because a lot of companies are going public much later. So, in order to tap into that, to get some of that exposure, you have to end up getting into like a ETF fund. The other, other only way before, like if you were a creditor investor or you go with like a third party app or something like that. But this gives you the opportunity to gain some um, exposure. Of course, it will be probably, volatile, and we'll track and see how it does. But this pretty much concludes this video. Let me know in the comments below what do you think about this fun. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to the channel. Ah.